Let's shift gears. Let's talk some Walmart. To help us do that, we have TD Ameritrade Network contributor Evelyn Baker joining us. It's always a pleasure. Happy Monday, Evelyn. Welcome to the show. Walmart is one that has been a very interesting success story for a couple years now. Throughout their transition process from the brick and mortar powerhouse that it is to an e-commerce giant as well, and it seems to be well timed given everything that's happened over the last 6 months.
Hi, guys. Right, Alex, you're exactly right. I mean, as a big box and consumer staples retailer, Walmart is expected to post some pretty strong earnings in its report tomorrow morning. And then, like you said, on top of that, e-commerce with all of the additional deliveries that people were requesting since, being home for so many months, that's definitely going to provide a boost for them as well. But I want to focus today on how Walmart is setting up itself to be the best competitor to Amazon. So that's what my two tweets today that I'm bringing to you guys are focused on. And I want to go ahead and start with the first one. So my first tweet today is from Hulk Capital and says, Walmart Plus launch date coming soon. If anyone can compete against Amazon, it's Walmart. So that Walmart Plus launch date has been delayed, and a lot of it is still unknown for right now. I believe that some people are hoping that we hear some more concrete news about that in tomorrow morning's report. But Walmart Plus isn't the first thing that that Walmart is really trying to do in order to boost up its competition with Amazon. I mean, they also partnered with Instacart, I believe it was earlier or last week, and that's going to enable them to make those same day grocery deliveries to its customers. And also in this way is how Walmart is really getting in there with these with the big grocery store competitions with the larger grocery store chain names like Kroger and Walmart and even Target as well. But my next tweet for you guys today is from a few days ago, but it says that Walmart is starting to look good. And I'm looking forward to Walmart's earnings to see what value the partnership with Shopify has produced. So Walmart partnered with Shopify back in June this year for its Walmart Marketplace, where small and medium-sized businesses can sell their goods. And does this sound a little bit familiar? I mean, Amazon definitely already has this. So in this way, too, is how Walmart's really been trying to boost their competition with Amazon. So from these tweets, I mean, it's easy to see that this is a very big deal with Walmart. But going into earnings, like I said, a lot of people are expecting Walmart's earnings to be very strong, or at least stronger than some other sectors that we've already seen. But guys, Kevin, I'll direct this question to you. How big will the focus be on these newest endeavors of Walmart to compete with Amazon, or like the Shopify, like the Instacart and Walmart Plus, or will the focus just be on, earnings?
Yeah, I mean, with Walmart, it's always that the headline numbers for this company are going to be gaudy. They're going to be absurd in terms of the amount of revenue they'll take in. What impresses me most about Walmart as a company is how lean and agile this massive company actually is. Their move into e-commerce was nothing short of spectacular, and they continue to innovate. Them partnering up with Shopify just shows everyone that even though this massive behemoth of a company still acts like they're a very small, agile, lean company that moves very quickly from one thing to another. So I'm completely impressed by Walmart and how, like I said, they continually adapt and are just willing to be so flexible in their business models. It's just an amazing story. And they are, without a doubt, Evelyn, the number one competitor to Amazon. I don't think anyone else comes close. Costco's in there, but they don't put up what the kind of things that Walmart puts up, guys.
Yeah, well said, Kevin. I would say I think that the e-commerce numbers will be, in center focus, as that is the growth component to Walmart, and that is the story going forward, and just how strong those numbers are coming in will be important. But something that comes to mind to me when I look at Walmart is just how stable it's been throughout all of this. It really hasn't been nearly as volatile as really anything else in the marketplace, and it's continued to kind of chug along like the blue chip stock that it is. Evelyn, great information as always. Have a great rest of your day. Evelyn Baker, TD Ameritrade Network contributor. As we say goodbye to Evelyn. We want to welcome in Landon Swan, the co-founder of LikeFolio.com, to join the conversation. Landon, this is an interesting one because, Walmart maybe not the top thing that people typically use to talk about shopping at, but now that there's this Walmart.com component to it, I want to know how much that's really, buoyed people's willingness to kind of, reassess shopping at Walmart that maybe had a different view of it in the past.
Yeah, I tell you what, I'm one of them. I've been an Amazon lover for a long time, and I recently placed an order on Walmart.com because I was tired of the shipping delays from Amazon. It used to be 2 days every time, and now it's like sometimes it's 2 weeks, and I got tired of it. And Walmart's going to give me something the next day, and so I think I'm not alone. I think consumers want the best value for their dollar, and I think that Walmart is in a really good position to compete with Amazon. They've got earnings coming up, and I think everybody's expecting some big numbers out of them. We've got purchase intent at I think 32% up year over year, which is obviously a big number. But these are wild times. I mean, last quarter their number of transactions was down about 6%, while their average ticket sale was up 16%. People were buying in bulk, and you can see that bar, that really high one, as the quarantine got started. But now we're coming out of it a little bit, and still a very good quarter expected, but it is down quite a bit quarter over quarter. And with the stock, basically, I think it's making all-time highs as we speak, most likely. I would be a little gun shy on bullish Walmart. I'm expecting a potential for analysts to be maybe a little bit disappointed with the numbers that come out. Now, we do have amazing data on their delivery and their pickup, their digital sales. They're doing extremely well on that. But overall, I'm a little bit cautious. I'm not a buyer of Walmart here. If anything, I'm looking for a pullback, long-term bullish, but short-term, I think that there's a chance they could miss this quarter.
Yeah, Landon, when you look at your data, aren't we looking at something similar that we talk about a lot during this pandemic, and that is the stickiness. The big spike that you had in numbers during that, the heat of the coronavirus, and the fact that, like you said, the ticket prices are going higher, the overall ticket price is going higher of your order, but aren't they resting? Aren't they recovering, as we would thought they would, at much higher levels than they were previous to coronavirus, which means they have some of that stickiness that we talk about so often in terms of consumer behavior towards them.
Yeah, you're absolutely right. There's definitely stickiness. It's coming back down to reality, but that new reality is higher than what it was in the past. And I think it's going to come down to what are analysts really expecting. Obviously, this quarter, definitely last quarter, even this quarter, are kind of outliers on the grander scale because of all of the pandemic and everything. So what are they expecting? Are they expecting another Q1 to come in? Are they expecting Q2 to be just like Q1? If so, our data suggests that they're going to be disappointed. If they're expecting a pullback to higher levels, then they may be spot on. And so that's really important. But what's interesting is we've got the digital sales, the delivery and pickup, massive spike on COVID. We saw that. And then to your point, Kevin, when we see that pullback, what happened was I think it's the 30-day moving average is about double what it was pre-COVID. And so there's the stickiness that you're talking about, and that's the competition to Amazon. So this is people getting delivery and pickup. This is sort of that digital world that Walmart's getting into, and they've got that huge advantage because they've got distribution centers all over the country as opposed to Amazon, who doesn't have that many. And look at that number. It was around 200 mentions on the 30-day moving average, and now it's up over 400 if you kind of ignore the spike. I mean, it definitely pulled back from the spike, but like you said, we're settling into a new normal that is much higher than what it was. So I think we've changed behavior. We've gotten consumers, their eyes to be open to the possibility of shopping at Walmart.com.
Landon, I think that the big thing is that it really has been a change of behavior. And I don't think that that's been stressed enough when covering markets, because when you see these impressive numbers, no doubt, that companies like Amazon and Walmart have posted, it's easy to say, holy cow, they're growing at 30% or 60%. But it isn't just organic growth. This is at the expense of some of their smaller counterparts for various reasons. Some of it might be their ability to handle increased capacity or only operate it online. Some of it may just come down to customer service. You talked about how quickly these companies can get items to their customers, but I've ordered from both of these companies, and if there's an issue with the order, there's almost no trouble ever getting a replacement sent. And you're often getting that replacement often before you even sent back the defective product. That smaller companies just maybe can't compete at that same level of customer service.
Sure, it's a scale thing, and you're going to have companies like Amazon and Walmart and Target, even Costco, like you mentioned, Kevin. They have economies of scale that small companies just can't compete with. So it is going to be the big guys dominating over the little guys, absolutely. But you bring up a point on the customer service angle. Another thing that causes me to be a little bit bearish on Walmart, at least in the short term, is their happiness level is about 50%, which compared to Target and Amazon are 65 and 68%. So Walmart at 50 is 15 or 18 points below those two competitors. And I think that is a big concern. They've got to do a really good job of executing on the digital stuff because they're getting a lot of new people, and first impressions are extremely important. You've got to nail those deliveries. I think that they will. So far, my experiences with them have been really good. I'm not sure if you guys have used them too much as far as how long it takes to get them, but get the products. But happiness is really important, and Walmart has a history of lower happiness. And if they can change their persona from kind of a not so great experience in store to a fantastic experience online, I think that they've got a really good chance of dominating in the long term. Right now, they're a little bit low on happiness, but again, that's an opportunity for them because people are sort of used to that. So delivery is going to be really key for them, guys.
Kevin, I think it's a very interesting kind of side conversation with these companies. It's always been interesting how Target's been perceived as this higher quality brand name and the goods and everything you could do at the Target experience than Walmart. But when I think of Amazon, I don't think Amazon necessarily has that quality, high quality perception that maybe a Target does. But it does have this perception that things are going to be quick and things are going to be executed on in a fashion that has satisfied its consumers, and there's a strong loyalty there. And I think that's what Landon's alluding to when he's talking about this opportunity for Walmart to really kind of change that brand perception. So I hear him, and I kind of have trouble arguing with that. Do you see or do you feel a quality difference between an Amazon and a Walmart in terms of the products?
I don't. In terms of, Walmart is like I said, remarkably user friendly. And remember, Walmart can boast that they don't have a membership fee. So you don't have to pay a membership fee to shop at Walmart. So that's that differentiator that they could say Costco, Amazon, you have to pay a membership fee. You don't have to pay anything for Walmart as it sits right now. Now, this new venture that they're talking about that will directly compete with Amazon and Costco for that matter, that'll probably have some type of membership. So I think the key to this earnings, they'll put up gaudy numbers. We've seen throughout earnings season, good companies whose stock have run up higher, put up good numbers, and the stock still sells off, Alex. But this earnings move may depend on their comments about this new business that directly competes with Amazon. Their update on that business may be what takes this company higher, or their lack of updating may take the company lower, Alex. That could be a new outlier with this earnings report that we see, Alex.
Yeah, and Landon, as you said, you're looking at this and you see things, you see the opportunities, you see where they need to execute. It's just a matter of what they actually report here and how the street interprets that information. So we'll look forward to when we hear from Walmart. But great conversation as always. Landon Swan, co-founder, LikeFolio.com.